Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors, and welcome back to Real Estate Investing Abundance. I'm your host, Dr. Alan. Thank you so much for being with us again today. We are thrilled to have with us Jason Balara, who is the CEO at Lark Capital Group, and he is a veterinary surgeon who has turned to real estate syndication. He focuses on Class B and C multifamily and small businesses, and he aims for strong investor returns. Lark's Veterinary Impact Fund addresses high suicide rates in the veterinary community, promoting financial wellness and awareness through partnership with Not One More Vet. So Jason, welcome to the show. We're so happy to have you with us. So take us into the show and share a memorable experience that helped you to be who you are today.
Well, I would say if we relate it to my background in as a veterinarian and also in real estate, I just growing up as a kid, we didn't have a lot, and we moved almost every year until I was in high school. And so I would say that for whatever reason, that gave me, and I wasn't in the military, so I think a lot of people might think that, but for whatever reason, that gave me this sense of wanting ownership. So, and I always just loved having pets around, but I think that directly correlates with, sort of why real estate has been important to me, is because just as a kid, I felt like I wanted to be in a place that was mine, that I could kind of do what I wanted.
Well, yeah, those early life experiences are interesting, and they do shape us in various forms and different ways.
Sure.
What was it that was causing your family to move so frequently?
I just single mother of two, usually financial type of issues, just trying to find some place that was more affordable. At times living at my grandparents' house, kind of just looking for the right scenario. But I think, once I was in high school, my brother's 5 years younger than me, but we found a place that we could stay for, and then we lived there for, 10 years after that. So it was a lot in the early years, but it's something that never feeling like there was that like single home to return to, because we moved so much, I think was definitely impactful in terms of, the way I view the world from now or going forward.
Well, certainly a lot of insecurity there. And unfortunately, there are a lot of people in the United States who are facing those same kind of insecurities. And for the last 20 years, that has just been increasing, not decreasing, which is a sad commentary on the wealthiest country in the world.
Yeah, for sure.
I think we could do better. Well, Jason, share with us your journey from veterinary surgeon to becoming the CEO and founder of Lark Capital.
Yeah, and I think sort of related to what we were talking about, my journey really started at a very young age. I've worked in construction since I was a teenager. And like I said, I always had that sense of wanting ownership. So before I even went to vet school, actually bought my first house. It certainly was the epitome of a fixer-upper. I couldn't afford to do anything but that. Also, that was in the year 2000. Anybody could get a loan, I guess is probably the best way to put it. And so I was able to get a low money down loan, got lucky to sort of ride the market up and refinance that house multiple times, did a lot of work, put a lot of sweat equity into it, and kind of continued that process. I started vet school basically right after buying that house. I graduated vet school in 2004. I finished my surgical training in 2008. A lot of people know 2008 for the time that the market crashed, and it did. It just so happened at that time, I didn't own any real estate. So I got a little bit lucky in the sense that my veterinary career had sort of taken me away from real estate for a little while. But after finishing my residency and kind of going out there, I just continued that strategy of like buying a fixer upper house, putting in sweat equity. So I continued to do that on the residential side. And then it was in 2000 that after, 2020, after kind of doing that strategy for a long time, I really looked at it and thought, okay, I want to scale. I want to be more serious about investing. And that's when I came upon syndication. I was looking for something, it coincided with the fact that we had our first son in 2019. So I was looking for something that maybe I could do that didn't require me to be in an OR and still make money and ultimately, have some level of passivity to it as well. So that's really what brought me into syndication, started Lark Capital and been kind of growing that portfolio since then.
Well, your experiences and your training as a veterinarian certainly give you a different perspective and different outlook on life. How has all of that training been useful and compatible with real estate investing? What uniqueness has that brought to your real estate investing?
Yeah, at a very mechanical level, like I said, I've always been in construction and now I'm a surgeon. So I sort of joke that I'm a, highly educated carpenter. I've just been working with my hands. I enjoy, taking something broken and putting it back together. So you could easily correlate that to what I've done in the real estate world as well. But I think when I got into the syndication, your question's a great one because at first I thought nothing. I thought none of this is going to, cross over or correlate. But what I realized is the skills that you have in terms of talking to clients on the veterinary side. I still have to talk. We're talking to a lot of people. There's investor relations involved with syndication. So the ability to communicate, the ability to present something that may seem complicated to someone who is hearing about it for the first time and presenting that in such a way that it can make sense to them so they're not afraid. I feel like that's applied a lot. I have done a lot of training with residents on the surgery side of things, and I've found that a lot of my teaching style and the way that I've worked with those residents has also kind of, I guess, come into play with some of the things in the real estate industry. And again, like I said, I've been on the construction and residential side for 20 plus years now. So I know what it takes to build a house. I know the mechanicals behind it. And so it was just becoming more of a CEO figure than a DIY guy was the real transition.
Well, Jason, you have focused your investing on B and C class properties and other kinds of businesses. What was the reasoning behind selecting these particular classes?
In large part, it was the ability to have a value add strategy. As I said, that's my background. I know value add on the residential side. That was very sort of familiar and comfortable to me. And value add from a construction standpoint on multifamily is going to be very similar. You just, instead of one house, you're doing a bunch of little units within. So all of that really fit with my skill set and my knowledge base that I already had. It's not the only place where you can add value in multifamily, as I'm sure listeners know. There's management things. There's you can. I look at asset management as three fairly distinct areas. One is construction management. One is the resident management, sort of the leasing side of things. But there's also the financial piece of it. And so really digging deep in the numbers and looking at, okay, how can we increase revenue, but also how can we decrease expenses and where to pull those levers. And I think there's sort of three very important arms within asset management. So that's been with a B and C class, you're looking at, they're not brand new construction. So you're going to have repairs and maintenance. You're going to have projects to manage, things like that. So that's kind of why I gravitated towards that.
Well, you touched briefly on going from essentially the single family fix, flip, and hold for rental, and then going from that to multifamily. And I'd like to go into that a little bit more because so many of the guests that I have gone through that same process. And almost to a T, almost every one of them say, I wish that I had gotten into multifamily much earlier than what I did. So I'm wondering, why is it that I hear that so often, and why is it that people take so long to go from single family to multifamily? And what was your journey like?
I'll give you my theory on the answer that why that so many people are giving that answer. We just we are out of the incredible bull run that we've had over the last 10 years. So I think it was very easy to say, look at all the money that was made in multifamily, look how good everybody did. I wish I got into that sooner. Right. I think that was, I think there's a lot of things I think come from social media, like, oh, I've been in multifamily for 5 years and I've made millions of dollars doing that. And so people wish that they had caught that wave. And I think it's great. Like if I could go back to 2010 and have bought multifamily then, that would be amazing. But I think the other reason why sometimes people take time to move from residential to multifamily, especially if it's your primary occupation, your primary source of business, is in single family and residential real estate, it's a lot easier to stack wins. So you're going in, and I just mean that in the sense of you're going to transact more often, most likely. So if you think about, really successful house flippers or wholesalers or things like that, they might be saying, oh, I'm flipping 50, 100 houses a year. When we do multifamily, if we do 4 or 5 deals in a year, that's a big year. Sometimes we do one, sometimes we do none when the market slows down. So the ability to recognize that the transaction is not the most important part of the deal is a big mindset flip when it comes from single family to multifamily, because multifamily, you really need to look at it from that long-term perspective in managing the asset.
Yeah, good answer there. Enlightened investors, if you haven't done so already, be sure and click that like button and also click that share so others can take advantage of the content. And finally, be sure to subscribe so you don't miss a single one of our upcoming episodes. Jason, tell us about the Lark Veterinary Impact Fund. What were the reasons behind setting up the fund, and how does the fund operate?
Yeah, so the reason for setting up the fund, there's a couple of things there. One, I'm a big proponent of mentorship, and I spoke to one of my mentors. We were kind of talking about where I had gone with Lark Capital and what were the next steps. She suggested starting a fund. I had always been reluctant because I always looked at funds as maybe beneficial for the sponsor, because I looked at it purely as like almost like it's nice to have that money already there. Now I can go buy assets. But I hadn't really looked at it from the perspective of the investors themselves and the diversity. And especially now, if you have a fund, the people that have capital available are the ones that are going to be able to take advantage of some of these distressed assets, because if you're able to close quickly, that's going to go a long way with brokers and sellers. So some of it was the conditions of the market. Some of it in the way I structured the fund, with it having multifamily and also small businesses, is because I just started to look at what I wanted to do for my own portfolio. I was, sort of revisiting. The market had shifted. What was I going to do for us? And at the moment, it is challenging to have the same level of cash flows from multifamily real estate as we did maybe 2-3 years ago. And so I started looking at, well, what can we add to this? And to me, business, I have a business, my surgery business, and I saw that as a lever that could be pulled maybe even faster than a value add strategy in real estate, but you still can look at real estate from a long-term appreciation and tax benefit standpoint. So I just started looking at this as what am I going to do for myself, for my own portfolio? And then I thought, I wonder if I can do this in a fund to present to investors. I had to see, is this even legal? So that's the first thing I did, is talk to my SEC lawyers, like, can I put this all within the same fund? And the answer turned out it was yes, but at very specific ratios. So within the fund, no more than 20% of the equity can be invested in small businesses. At least 55% has to be my multifamily real estate with me on title. And then we can go up to 25% as a fund-to-fund portion. So it was very specific to how the SEC said I had to structure it. So that's kind of how I came to that, kind of conclusion as to how I wanted to fit it. And then I very much didn't feel comfortable doing it unless I made it have some level of impact. And so that's where we decided to go with that partnership with Not One More Vet. For your listeners, Not One More Vet is an organization that is dedicated to supporting veterinarians that are struggling. There's a high suicide rate in the profession. And so what I wanted to do was to use that fund to be impactful on multiple levels. And one of those ways is just through awareness. So awareness to veterinarians that these things are available, that there are ways to better their financial situation, but also awareness for people outside of the profession to maybe understand why veterinarians might have a high suicide rate. And then the third thing is just sort of that financial support. And that's where we are partnering with Not One More Vet, and we'll be donating 25% of the fund profits to Not One More Vet as a way to help support their mission.
Well, Jason, tell us a little bit about why it is that that vets tend to have such a high suicide rate as a profession. I don't really think that most people really understand that, and are probably surprised by the fact that vets have such a high suicide rate, because all of those of us with pets and who have other animals in our lives interact with vets all the time, and we just see them as resilient people in a lot of ways, and we just see them as generally compassionate people who have a sense and a feeling for the furry animals within our lives that we love. So what is it that is behind this high suicide rate?
Yeah, and I mean, all those things are true. I do think it's a very resilient population. So this is a hard thing to probably answer in the time we have today, Alan, but ultimately I'll give you a couple of maybe reasons. One is financial pressures. Many of the vets, especially now, a lot of the vets that are coming out of vet school, they may have $200,000, $300,000, $400,000 in school loans. So they're starting their career with sort of a huge financial burden, and then getting paid disproportionately to an MD or someone with equivalent years of training, essentially. So that's one. I mean, there's financial pressures there. The other thing is the kind of expectation. You mentioned compassion. There is a such thing as compassion fatigue, and so sort of needing to present that I was going to say facade. It's not a facade. We as veterinarians, we love animals. That's why you get into the field. But to try and be compassionate and understanding and talk to each and every owner can get very challenging, especially, I think, in the general practice setting. So I'm a specialist. I typically generally most specialists have an hour for their consultations, but a lot of the general practitioners, like your family vets that you interact with regularly, they might only have 15 or 20 minutes allotted for that schedule, for that appointment. And so trying to reset your mind every 15, 20 minutes, like if you look at any of the efficiency type studies or deep work type studies, that's incredibly hard on your mind to shift gears over and over and over again throughout the day. So there's that. During the pandemic, I mean, this was a problem before the pandemic started, but during the pandemic, the number of pets in the US doubled, and the number of vets and technicians actually went down. So an already overworked population just got even more overworked. And so there's, like I said, there's a number of reasons, and it's hard to kind of I think, wrap it all up succinctly, but
Mm-hmm.
just pressures from a lot of different directions to, kind of be this. I mean, here's another thing. Like, most people expect their vet to know everything, like to know everything about every animal. If you think about it, it's a pretty unrealistic expectation. I'm a surgeon. I generally couldn't tell you how to do your pet's vaccines or deworming, things like that, because I don't deal with that anymore. I get to specialize in something I love, but a lot of times your family veterinarian is expected to know how to do literally everything. You're supposed to be able to do surgery. Every vet is expected to be able to do a spay, but I'll tell you, as a surgeon, a spay, I do much easier surgeries than spays. That's not an easy procedure, and so people think, oh, you should just be able to do this thing, and it's just kind of probably unrealistic expectations that are placed on the profession, but also we do it to ourselves. It's not it's not all from the outside. It's definitely a prevailing feeling within the profession as well.
Yeah, is the knowledge base is overwhelming to me, and I really wasn't aware of that until I had to transport my horse to the veterinary hospital, and it's at the school hospital at the University of Tennessee at Knoxville. And so I was interacting with the students, and they were telling me what their curriculum is like, and they have to know about fish, they have to know about the avian world, they have to know about snakes, reptiles, they have to know about mammals, of course. And I was just flabbergasted that in the short time that they have in school, which seems like a very long time, but but 4 years to absorb all of that material is, I think, quite overwhelming.
Yeah.
So yeah, so a lot of reasons there, I am sure, and then certainly starting off your profession behind the eight ball, at least in terms of debt, is not uncommon to the health professions. But like you say, MDs at least are getting compensated for that, dentist, optometrist, and so on and so forth. But veterinarian pay scale just doesn't match up to those others. And even for physicians, that's a huge challenge to come out of school with a $200,000 to even $400,000 in debt.
For anybody, I mean, it's a huge bill to start your career with. It's just it's a little bit crazy to think about.
And I saw a chart one time. This was a dentist who actually invests in real estate, and he was showing that plumbers over a lifetime do better financially than physicians do, generally, because of the time that they spend in school. A good 8 years, they're not making a living, and then they come out with anywhere from $200,000 to $400,000 in debt that they have to pay off. And so over a lifetime, you'd be better off going into a plumbing profession than into a medical profession. And I think that I can see that as a major reason for suicide rates, because that realization is not something that I don't expect any of your instructors in your veterinary school are telling you about that reality. And you probably doesn't really face you until you're out and practicing and you go, my God, I thought I was going to make a living here, and I'm just barely getting by.
Yeah, it's you think like, oh, I'm going to go through these steps and then I'm going to realize my dream and everything's going to be easier, and it really doesn't get easier. And here's a probably a very telling thing about this. So I'm a vet. Most of my friends are vets. My wife is a technician. I don't want my kids anywhere near it. I don't want my kids to come to school to work with me. I don't want my kids to know what we do, because I don't really want them to do it. I don't want them to face those pressures and have, like, I love doing surgery, but if I didn't do surgery, I probably wouldn't be a vet anymore. Like, I just was, lucky enough to realize I wanted to go in that direction, but it's just, yeah, the idea of my kids, like most, I think a lot of parents, they like the idea of their kids following in their footsteps. I don't want them to. not in the veterinary world. I just think it's too much. I see too many young people struggling that are coming out of school.
Well, we need to do something about that, because I really, truly value my vets. They're important people in my life. Well, Jason, tell us how we can get in touch with you to get into the Lark Capital funds.
Yeah, absolutely. Our website is larkcapital.com. That's the easiest way if you want to go just, sort of schedule a call, or you want to invest. It's all there and available. You can reach out directly to me. Jason@larkcapital.com is my email. If someone wants to just shoot me an email and talk about it, we can set up a time to chat. I'm happy to connect with anybody and go more detail into if they have questions about what we've talked about here.
Well, Jason, let's go into our last 4 questions and share with us one of your most difficult setbacks in life. How did you come through that time, and what did you learn from that?
Yeah, I think I'm still learning from it, but last year I had a deal fall apart because interest rates shot up while we were under contract, and I lost about $500,000 in earnest money. So that was when the market still dictated that earnest money was hard essentially right away. Is not so much the case anymore. Anyone listening, don't do that anymore. That's not what the market is dictating right now. But yeah, I had a deal fall through, and it was my money, my Lark Capital money. So it wasn't investor money, but it was still a hard time to get through. And I think I'm probably still recovering from that. But I've learned a lot just over I think you can either sort of give up, walk away when things get hard, when you're trying to do something big, or you can take all of that and use it as learning lessons.
Well, that is a hard and challenging lesson. I think all of us in real estate have learned that lesson, one way or the other.
Yeah.
Well, share with us 3 good things you've experienced in the last 24 hours.
Highlight of nearly every day is just seeing my kids, whether that's first thing in the morning or when they get home from school. Same thing with my wife. I couldn't imagine being married to a more supportive person. When we lost $500,000, she didn't leave me. So I think right there, that was a big win. I enjoy exercise, and I got to go to the gym this morning. So I think, I guess, is that 3? I'll say my kids, my wife, and getting some exercise in. So that, to me, we picked up our Christmas tree, if I have to count family all as one. So we're trying to still, even when things are hard, we like to, prioritize family and things like that. So it's always looking at that as my compass.
Well, how are you putting your success as an investor and entrepreneur to work to create a world full of well-being?
Well, I think, we've talked a lot about it. I'm trying to do that through our fund, and not just, for the investors in the fund, but like I said, I'm trying to use the platform to raise awareness. I guess it's a lofty goal, but maybe I can change my idea about whether or not I want my kids to become veterinarians, or maybe we can, as a profession, sort of fix some of these things, address some of these things. And so I think that's really where I'm trying to make a difference is within my veterinary community.
Well, imagine you've come to the end of your life, and as you lay on your deathbed, what do you look back on with your greatest sense of joy and fulfillment?
Family, my kids, my wife, just the feeling that they will take away. The hard days end when that just kids want to play with you, like let's all sit around and play a game or whatever. That just to me, that can take everything else away. So I think that's probably the easiest answer of all the questions.
Well, Jason, it's been a pleasure having you. Wonderful to get to know you just a tad bit better. Thanks for being with us today. And enlightened investors, thank you for joining us today for a wonderful, informative, and engaging conversation. Please like, share, and subscribe, and go to Apple Podcasts and leave us a rating and a review. Until next time, live abundantly.
Thanks, Alan.
Thank you.
Enlightened investors, wait, don't go just yet. I just want to remind you about our recently launched webinar that you will not want to miss. If you're at all curious and would like to learn more about how real estate investing can diversify your investment portfolio, alleviate the anxiety associated with Wall Street swings, leverage your 401ks and IRAs to substantially increase the return on your investment, and do all of this with turnkey, hands-off, passive real estate investments, then you'll want to immediately go to steedtalker.com/webinar. In the webinar, we'll also address the common dubious investment schemes that you want to avoid. To access the webinar, go to steedtalker.com/webinar. I look forward to seeing you in the webinar.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.